So Stephen, thanks so much for your time. I'm going to quote you. So you came out with results today, not the best of results, and we'll walk through those numbers now. But you said that you're very excited to be leading this business into its next chapter. Talk to us about what that chapter looks like.
Well, what's very interesting about EOH is they sit right in the middle of the fourth industrial revolution. Everyone's trying to digitize everything, everything's trying to go mobile. And so it's a very exciting space to be. And it's gone from being a luxury purchase to a necessity. Mm-hmm. So even in tough markets, people are looking at digitizing business and processes to save money. And that's really where we come in. So the opportunity to be in the middle of that and try and move from a product-based business into actually creating ecosystems with all the products together for clients is very exciting.
But are they though? Because your revenue this time around only increased by 8%.
Yes, and interestingly, that was largely from acquisition, so it wasn't organic. What really happened last year is the first half, with all the negative media reports, there was a lot of introspection, there was a lot of discussions with the lawyers, with the regulators, with our customers. Not a lot of business was done. So you were basically executing 2017 mandates. And so with that rolled into the second half of last year. And we've had to then pick that up again. So you almost had only mandates for half a year. And then you were executing, finishing out. And so the second half of the year, once we got through all of that and got cleared of it, you then saw the mandates coming back. So that should then roll into this year.
Mm-hmm. I mean, talking about some of that negative press, because we did see the dent that it did cause in your share price. Quoting you again, another one of your ambitions is you are welcoming the opportunity to ensure that EOH remains a trusted brand. So you essentially have quite a lot of work to do to restoring the company's reputation amongst investors and amongst the public. How do you intend on doing that?
Well, the main way to do it is just to create proper process. And that's why we engaged ENS. They've gone through the anti-bribery and corruption and fraud things with us, helped us with some of the allegations, went and investigated them, made sure there was nothing untoward. But you have to put processes in, because governance, as you know, in the banks and that is big. But you need to make it a positive thing. It needs to be a business enabler so that you do the right business with the right people in the right way. And unless you can inculcate that into the ways of work, then it becomes very difficult, because it becomes almost a policeman thing. And so we've engaged the University of Stellenbosch Business School, the Center for Governance in Africa. They did some work for me when I was at Barclays. And they are going to help me try and build some fourth industrial revolution governance processes. The idea and sort of innovation speak is to get 10% the governance with 10% the processes. And if we can get that right and be real cutting edge on it, maybe we can even do governance as a service, like we do cloud as a service, or processing as a service. So really trying to see if we can fundamentally keep the entrepreneurial flavor of the business, but put it into a big corporate governance requirements.
Mm-hmm. I mean, as part of the whole negativity that hit the reputation of the company, you have subsequently, or EOH has subsequently cut back on its work that it's doing with the public sector. But what is the plan and the outlook for that going forward?
So you would have seen that public sector is only 15% of our revenue, so it's not a huge part. The problem with the bit that we cut, just to go a step back, so we took the public sector business and we put some of it into EOH Technologies and some of it into Nextech, and what was left was what we call the complex change management processes for CRM, for ERP, that have got 3 and 4 year timelines. And we're just finding from a risk management perspective that to get those implemented inside some of the public sector entities is very difficult, because there's so much change going on.
Sure.
You actually need some constant management for a 4 year period to execute from start to finish. And so we've just decided to pare that back for the moment. And if things change over the next couple of years, we'll pick it up again. But at the moment, it's really a risk management thing. Otherwise, you sit with staff and you're not getting any income. And these are highly qualified, skilled staff that are expensive.
I mean, recently announcing the conclusion of your BEE deal with Lebashe, that injecting some 1 billion rands of capital into the group. Remind us again what the plans for that money is?
The real plan for that was twofold. One was that we need 51% at least transformation, black ownership. All our big suppliers and customers are asking for that. So it's an absolute requisite in the current situation in South Africa. So that was the first thing. The second thing was they came with their own money, so we didn't have to give them any support, which is obviously a big cost on the balance sheet. So it was very attractive for us. But really what we're going to do with that money, we have to pay for some of the past investments as they meet their profit targets. You have to pay cash portions. There's some bank debt, some repayments coming due, and then there's some left over to have a look at IP creation or some new acquisitions, small acquisitions that we might want to fill the gaps.
Finally, Stephen, I mean, you're 1 month into the job. Congratulations. This time next year, when you deliver on EOH's 2019 financials, I mean, what can your shareholders hold you accountable for? What will you deliver to them?
So what I've said to them today was, one is we're going to implement this governance. We're doing ISO 37001, which is the latest governance standard. That will be done. We're halfway through it. Whatever comes out of the Stellenbosch Business School review, and we'll obviously be open and transparent about that, and we'll implement that. And then they've now split the two businesses, but they've just split the two businesses. They don't have their own corporate structure, capital structure, so I have to work through that. The EOH bit, probably 70% finished. The Nextec, maybe 30% finished. So EOH, I hope to be done by the end, so this time next year, so we can actually talk about that. The Nextec bit, I think maybe take a little bit longer, maybe 2 years, but we'll come back with a proper strategy, and then out of that will be the incentives and the KPIs that will lead into things like return on equity, cash flow generation, etc. And we'll be transparent about that, and then we can sort of mark ourselves to mark our homework to those expectations and try and create transparency around that.
Sure. And that Stellenbosch review, when will it be released?
Well, they're doing the first study in October, and then whatever comes out of that, we'll broaden it or focus it. And once I've agreed that, we're hoping to have a board meeting. That we've got a social and ethics committee and a risk and governance committee late November. And once that's all approved, then it will be, we'll say here's what we're going to do by when, and that will then be part of.
Sure. And the scope of that review again?
It's just general governance.
Right.
So from King Code to JSE rules to Companies Act to ISO 37001. What are we expected to do? What's best practice? And then also you've seen the JSE coming out with some suggestions. We'll be having a look at those and see how we implement some of those, working with the JSE around that, because I think some of what they're suggesting is very sensible.
Right. Well, Stephen, we will leave it there. Thanks so much for your time, and we'll catch up with Stephen and the company again, I'm sure, when the results of that review are released and as and when further developments take place. That was Stephen van Coller, who is the CEO of EOH.